As of right now, Wednesday, April 22, 2026, during the live trading session, Keel Infrastructure Corp CDR is trading at $20,480 Rs, reflecting a sharp intraday decline of 3.26%. This movement comes amidst a broader transition for the company, formerly known as Bitfarms, as it attempts to reposition itself from a pure-play cryptocurrency miner to a foundational high-compute infrastructure provider. While the surface-level narrative suggests a simple rebranding, the reality under the hood is far more complex and involves an aggressive pivot toward AI data centers and energy infrastructure that the market is currently struggling to price accurately. Most investors looking at Keel Infrastructure Corp right now see the name change and the recent redomiciliation to the United States as a desperate move to catch the tailwinds of the artificial intelligence boom. However, the unexpected development here isn't just the name on the door, it is the massive 2.2 gigawatt pipeline of grid interconnections they've quietly secured across Pennsylvania, Washington, and Quebec. This isn't just a Bitcoin miner in a suit. This is a power play company that has managed to lock down some of the most sought-after electrical capacity in North America. In a world where big tech is scavenging for every available megawatt to fuel large language models, Keel is sitting on a gold mine of energy access that would take competitors years to permit and build from scratch. There is a common belief that stocks like Keel are purely high beta proxies for the price of digital assets. While that was true for Bitfarms, the reality of Keel Infrastructure is that they are decoupling. They are moving toward a model where their value is derived from the keel of the ship, the foundational hardware and energy grid that keeps the AI industry afloat. Yet despite this massive energy moat, the stock is feeling the pressure today because the market demands immediate proof of conversion. It's one thing to have a power permit, it's another to have a rack of H100s humming and generating high-margin revenue. This tension between the infrastructure promise and the mining reality is exactly why we see these 3% swings on a Wednesday afternoon. When you look at the recent trading volume and institutional activity, it becomes clear that there is a rotation happening. We are seeing some of the old-school crypto funds exiting their positions, while more traditional infrastructure and digital asset ETFs, including those managed by Fidelity and State Street, are starting to build out weightings. Institutional players are looking at the price-to-book ratio, which currently sits around 2.8, and weighing it against the replacement cost of their 2.2 gigawatt pipeline. If a company like Amazon or Microsoft wanted to buy these power rights tomorrow, they would likely pay a significant premium over the current $1.62 billion market cap. This creates a fascinating floor for the stock, even as it experiences volatility from retail-heavy platforms like the Robinhood app or SoFi Invest. Let's get into the nitty-gritty of the business model. Keel Infrastructure Corp operates as the backbone for high-performance computing. They own and operate the physical data centers, the cooling systems, and most importantly, the proprietary energy contracts. This is a capital-hungry business. Unlike software companies that can scale with a few keystrokes, Keel has to pour concrete and buy transformers. This is why their free cash flow remains negative, recently clocking in at around negative $73.1 million for the quarter. However, their liquidity position is surprisingly robust for a company in this sector, with over $87 million in cash and a current ratio above 3.0. They aren't facing an immediate cash crunch, which gives them the runway to execute this massive pivot. If you're watching the tape on Interactive Brokers or checking your Fidelity mobile app, you've probably noticed that the stock has been respecting a very specific technical range lately. We saw a strong push from the low $2.3 up toward the $3 mark on the Nasdaq listing before this recent consolidation. In the CDR market, the volatility is often amplified by currency fluctuations, but the core sentiment remains the same. $20,000 Rs is acting as a psychological support level that bulls are fighting to defend. If it breaks, we could see a slide toward the next high-volume node. If it holds, it sets a base for the next leg up as they announce their first major AI tenant. Comment below how many shares of Keel or the original Bitfarms you currently hold, and let me know if you believe their energy pipeline is enough to beat out the established data center giants. The transition from Bitfarms to Keel is essentially a bet on the scarcity of power. The world is running out of electricity that is already connected to the grid and ready for industrial use. By moving their headquarters to Delaware and their executive offices to New York City, the leadership is signaling that they want to be treated like a utility or a REIT, not a speculative tech startup. They are chasing a different pool of capital, the kind of online investing money that stays put for decades, not the kind that flits in and out of Robinhood crypto trades. This is a long-term play on the picks and shovels of the digital age. However, we have to talk about the risks. The reality is that Keel is still structurally loss-making. Their EBIT margin is deeply negative at negative 37.6%, and their gross margins are currently underwater. They are in a race against time. They need to convert their Bitcoin mining floors into AI server racks fast enough to satisfy investors who are losing patience with the volatility of the crypto market. If Bitcoin takes a massive dive before Keel has diversified its revenue stream, the stock will likely follow it down, regardless of how much power they have in Washington or Quebec. The market is currently pricing them with a speculative tag, and it will take at least 2 or 3 more quarters of earnings reports to prove they can actually manage the higher complexities of AI cooling and uptime requirements. Looking at the broader landscape of investment help and online investment sites, Keel is often categorized under software or application software, but that's a misnomer. They are an infrastructure company. They are closer to a utility than they are to a coding house. This leads to a lot of mispricing. Investors using Schwab Intelligent Portfolios or other robo-advisors might find Keel tucked away in new economy or blockchain baskets, which often leads to forced selling when those specific sectors underperform, even if Keel's internal fundamentals are improving. The story here is one of total transformation. The expectation was that this company would live and die by the 4-year Bitcoin halving cycle. The reality is that they are trying to break that cycle by becoming indispensable to the entire tech ecosystem. Their recent 163% yearly growth shows that some of the market is starting to get it, but the current intraday drop shows that there is still a massive amount of skepticism. For the individual brokerage account holder, this is a high-stakes game of who blinks first. As we look toward the future outlook, the catalysts are clear. Watch for any announcements regarding power purchase agreements or partnerships with major cloud providers. These would be the validation points that turn a speculative infrastructure stock into a core holding. On the downside, keep an eye on energy regulatory changes in Quebec. If the government decides to prioritize residential power over data centers, Keel's moat could evaporate overnight. This is the tightrope they are walking. To summarize the situation, Keel Infrastructure Corp is currently in the valley of death between 2 identities. They have moved away from the pure crypto narrative, but haven't yet fully landed in the safe harbor of the AI infrastructure world. Today's price of $20,480 Rs represents a market that is waiting for a sign. The contrast between the expectation of a simple rebrand and the reality of a massive 2.2 gigawatt energy infrastructure play is where the opportunity lies. If they execute, they become a foundational pillar of the modern web. If they fail, they are just another miner that couldn't handle the heat. The depth of their energy pipeline is their greatest strength, but their current lack of profitability is the anchor dragging them down. Keep a close watch on the volume at the $2.8 level on the Nasdaq. That is where the real battle for the soul of this company is being fought right now. Maintain a disciplined approach to your self-investing strategy, and remember that in the world of high compute infrastructure, power is the only currency that truly matters in the end. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.